Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 24th, 2026, and we're diving into Elanco Animal Health's latest earnings report for the fourth quarter and full year 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Elanco has reported some interesting numbers this quarter, and I'm excited to break them down with you.
Revenue and profitability overview. Let's start with the top line. Elanco reported a net revenue of $1,144 million for the fourth quarter of 2025, which is a 12% increase compared to last year. John, can you shed some light on this?
Absolutely. The revenue growth was driven by strong performance across both the pet health and farm animal segments. Pet health revenue increased by 11%, while farm animal revenue saw a 12% rise. This growth was supported by new products like Credelio Quattro and Zenrelia, as well as increased volumes in cattle and poultry.
Despite the revenue growth, Elanco reported a net loss of $276 million. What factors contributed to this?
The net loss was primarily due to significant restructuring charges and asset impairments totaling $202 million. However, on an adjusted basis, Elanco reported a net income of $64 million, translating to an adjusted EPS of $0.13, which beat the analyst forecast of 11 cents.
Operational efficiencies and future outlook. Elanco's adjusted EBITDA margin for the fourth quarter was 16.7%. How does this compare to their historical performance?
The adjusted EBITDA margin saw a slight decline from 17.4% in the previous year. This was due to increased operating expenses, particularly in marketing and R&D, as Elanco invests in its expanding pet health business and innovation pipeline.
Looking ahead, Elanco has provided guidance for 2026. What are the key highlights?
Elanco is projecting revenue between $4,950 million and $5,120 million, with an adjusted EPS range of $1 to $1.06. They are also raising their innovation revenue target to $1.15 billion, reflecting strong momentum and market share gains.
Strategic initiatives and product innovations. Elanco has been focusing on innovation and strategic initiatives. Can you tell us more about their recent product developments?
Certainly. Elanco received USDA approval for Befrena, a new treatment for canine allergic dermatitis. Zenrelia has captured significant market share, with 50% usage in U.S. clinics. Additionally, Experior sales grew by 80% year over year, showcasing the success of their product portfolio.
And what about their strategic initiatives like Elanco Ascend?
Elanco Ascend is a productivity initiative aimed at delivering $200 million to $250 million in adjusted EBITDA savings by 2030. This includes restructuring efforts to optimize their footprint and increase innovation capacity, which are expected to yield significant cost savings in the coming years.
CEO and CFO insights. Let's discuss the insights from Elanco's leadership. What did CEO Jeff Simmons have to say about the company's performance?
CEO Jeff Simmons highlighted the significant progress Elanco made in 2025, emphasizing their growth, innovation, and cash generation. He expressed excitement about the new era of growth and the robust pipeline that will continue to transform animal care.
And what about the CFO, Bob VanHimbergen?
CFO Bob VanHimbergen spoke about entering 2026 with positive momentum and confidence in their IPP strategy. He mentioned that the full-year outlook is balanced, with expectations for sustainable revenue growth and margin expansion, supported by the Elanco Ascend initiative.